All right, investors. Today let's consider SAP company. It's the German software company. First, let's start with the fundamental analysis and then we will go into technical analysis. And by the end of the video, you will be able to see the stock's growth potential or decline potential. And you can answer the question where should you, at which point should you sell the stock with profit or with loss if the stock will start declining. So let us start the current video. SAP company is paying dividends, but the dividend yield is very small. That's why we are not calculating the stock target price using the DDM model. As you know, you can look my previous video where I calculate the stock target price, stock fair value using the dividend discount model. But in this case, we're not doing it because the dividend yield is small. The stock is not paying large dividends. Usually DDM is applied to companies that are paying good dividends. That's why we will be using the DCF, discounted cash flow model, and price income model to calculate the stock's target price. And then we will be comparing it with the analysts. First, let's start with the DCF valuation model. You know this already from the Google Sheets. And if you didn't see the video with the detailed guidance on how to use the DCF model, you can look at my other video. I will put the link down to this video and you will be able to watch the detailed guidance on how to calculate the stock growth potential and fair value using the DCF model. But for now, we already have our model ready. We should simply substitute the ticker SAP, that's the stock ticker. And you see the model is recalculating everything, extracting the data using the financial modeling prep API endpoint. And now you see that's the financial data forecasts up to the year 2028. And now we see here that it has a 51% decline potential. If we go to the models over here, you can see that the intrinsic value of the stock is 120. These are the calculations. Again, for the detailed instructions, you can see my previous video on DCF model. But basically, we need this number 120. We can write this down separately over here. So 120 for now. 120, just I'll write it down like this so that you can see. Plus, now it's turn to calculate it using another valuation model. Now this time let's calculate it with the price income model. We used the DCF model. Now see with the price income model, that's very simple model. You should use it when you don't have time for in-depth calculations. Basically here you compare financial ratios to closest peers. Also replace the ticker. Again, if you don't know how to use this model and how to build it, I have detailed instructions. You can look at the on my other video. The link will be down to in the description to this video. And also I replaced the ticker and you see it is already extracting the financial ratios for your selected stock. Now you need to find closest peers. The same, you need financial ratios for your closest peers. To finding the closest peers, you should go to Financial Modeling Prep website. I will put the link to the description. But basically, when you go to Financial Modeling Prep website, there would be the API tools. Just go to the documentation. And in documentation, in the search bar over here, just type peers. And you see here the stock peers API endpoint. And then click here. You need to obtain your custom API key. I'll also place the link to getting your custom API key. And then with this API key, you will be able to use this endpoint. Once you obtain your custom API key, register with Financial Modeling Prep, you can click on this link. And on this link, there will be an API key. Just replace it and put your own API key and substitute the stock ticker with SAP. And then you will get the closest peers. So once you click this link, once you obtain your custom API key, you need to go to the address bar in your browser. And then in the address bar in the upper corner, you just have to input your custom API key where it's written API key equals, and then replace your ticker with replace given ticker as usually it's given like Apple, AAPL, replaces with SAP where it's written symbol equals, and then hit enter, and you see SAP closest peers. Let's take the first 4, TYL, and we replace it over here. And as you can see, it is recalculating everything, extracting new data. Then let's take another peer. Then the next peer. And the last one. So this is very simple, simplified model, and you can see the averages for those ratios extracted from the closest peers. This is the average from the closest peers. These are ratios extracted for the SAP company, and you can also replace those ratios if you see ratios that are most important, ratios that best reflect company's businesses. You can use those ratios. You can see the weights here. I assign equal weights to each ratio, but if you think that one is very important, has higher importance, you can assign higher ratio to it and low ratios to others. Then that's a simple calculations. Again, I have the video with detailed instructions. I'll put the link to the description, and you can look at how you can calculate it using the price income model. And based on this model, it gives you 19% decline potential with the target price of 186. So that's the second point in our valuation. So we write it down here, 186 plus. Now, the next thing we should do, again, you can go to the Financial Modeling Prep website and just in the search bar type target to see the target prices of closest financial analyst and the consensus target price, the average target price for your selected stock. Just go target consensus. Or maybe, yes, target price consensus API endpoint. Again, you would need your custom API key and then put your API key and replace the stock ticker. But assuming you already have your API key, just click on the link. And in the address bar, just replace this Apple symbol with SAP. And now you see the target price calculated. These are prices calculated by different investment analysts. You see the highest target price, someone assigned 265. The lowest target price that someone assigned is $66 per share. And the consensus target price, that what we would need, is 173. That's the average target price assigned by different investment analysts that were calculating the stock target price. So that's basically the average target price, 173. So now we have 173 and simply divide everything by 3. We are calculating the average. So the average based on 3 models, DCF model that we've calculated ourselves using our assumptions over here, is 120. Then the target price that we calculated using the price income model is 186. And the price that we extracted based on the calculations of different investment analysts is 173. And the average target price is 157, which implies the decline potential to the current market price, 157. Now let's open the technical graph. Let's open the candles graph to see. Yeah, here we go. You can use your trade terminal if you want to undertake this analysis. It doesn't matter which website you're using for the technical analysis, but we just need this 157. Let's plot it somewhere on the graph. 157. Let's say it's somewhere here, approximately. We don't need exact number. And indeed, you can see there was some support point in the past for the stock, somewhere here, 157. Yeah, that's the fundamental value of the stock. You can see the stock is significantly overvalued based on our calculations and based on the analysts' expectations. And there is a high probability that if investors will start selling the stock aggressively. It can go to this level, maybe somewhere lower, maybe close to this level. It will be fluctuating around this level. But things currently, we have high trader expectations connected to this stock. It is rising aggressively, and you can also see the selling point for your selected stock. For that, you can use the Google Stock extension called Stock Analyzer. You just have to download this extension. Again, I will put the link to the description. And once you install this extension, just open this Chrome extension, input your custom API key, and then the stock ticker SAP. Press the calculate, and it gives you the stop loss and take profit. It is using the standard deviation, so basically it calculates the stock standard deviation for the period, and then adds 2 standard deviations below the current price, and that would be the stop loss, and then adds 3 standard deviations to the current share price, and that would be your take profit, the point at which you're gonna sell with profit. And stop loss, let's say you bought the stock, I don't know when to sell it if it starts falling on the shorter term. And this is your answer, 280, 218, 247. 218 and 247. Somewhere here. So if the stock will start rising, it has approximately 7% upside potential on the shorter term. And if the stock will start falling, let's see it here, around 4%. So if around 5%, I would say. So if you're tolerant to risk, you can still hold this stock. But you can even place it lower somewhere, but make sure that it is aligning with the support and the resistance level. Here, the sell stop loss that you've placed, it is aligning close with the support level over here. As you see, historically, when the stock was approaching this level, it is gaining in volumes. That means there were strong sellers, and then it overpassed this level, stayed on this level for some time. That means that there was a huge seller on this level. Then stock overpassed this level, we see decline in volume. That means that the large sale already sold his volume, and then this level became the support level. Again, you see slight volume jumps when the stock approaches this support level. And yes, there is a high probability that if it will hit this level again, you can wait slightly up till this point. When the stock will reach this point, it can bounce back. But then if it overpasses this level, there is a high probability that it will continue falling. But please make sure that you use other indicators as well as VWAP, for example, volume weighted average price, and also look at the volumes to make sure that you have a strong downside trend. But here we have this short-term trading range for that stock, and the mid-term target price is somewhere here at 157. Of course, analysts may reconsider their target prices if the stock will show better than expected free cash flow to the next reporting period, but we still have time before the next reporting period. But based on the fundamentals, based on the valuation models, the stock is currently overvalued with the target price of 157, and this is the trading range based on the short-term trading. So it's up to you whether you should buy this stock for now or whether you should wait until a slight correction. And the US stock market correction, if it happens, it can affect this stock too, as investors will start selling of stocks that are more overvalued. They will start selling them more aggressively, and this can also affect this stock. You can of course wait, and if you're still holding this stock, that's the level where you can sell if you're not sure in company's fundamentals. But of course, if you can keep holding it if you like their product and service, and if you're sure that they can improve their financials to the next reporting period. So thank you very much for watching this video. I hope it was useful. Please hit a like button and subscribe. Thanks a lot.